just get right in because I don't know if I can cover everything I want to cover in 10 minutes. Last time I talked about the yield curve was trading somewhere down here, August 16th, at minus 11 or minus 8 basis points, depending on the day that you want to talk about. In the next few days, we saw the yield curve spread spike up and back into positive territory. I want to show you why exactly I was concerned about that in the first place. And again, I've been following this pattern, this spread for a long time. I got faked out here on the head and shoulders bottom. It was not ready. Prices came down, formed a double bottom, falling wedge right here, and then into a triangle, which is now broken out. I go back again to my lines here to 2008, 2007. You can see the yield curve bottomed in November of 2006. The stock market, the S&P 500 that is, did not bottom till March of 2009. The stock market, however, did not peak until April or so of 2008, I believe. Let's look at the S&P right here. So the S&P 500 peaked, October of 2007 and bottomed in March of 2009. The yield curve back then, what was it doing in October of 2007 when the stock market peaked? It was right here at plus 60 basis points on its way to normal. So the GFC didn't technically manifest in stocks until right here, October of 2007. What that tells me is I think we're close to a generational buying opportunity, so long as we are not Japan and don't go into a 50-year correction. Let's move right on. That's what I see in the yield curve. I've been pretty clear about it for, I don't know, probably 2 or 3 years now, but it's happening. So here we are. Oil, you can see that going back through the last, several chart wizards, actual alpha reports. Here, the last one, August 16th, it looks like. Crude CL1, the front contract was trading $75. I reiterated my bearish view and why. Prices are trading $67 and have taken out all of 2024 lows. We did see a bounce right here at the 2023 low support, but get a bounce. But frankly, I'm crude prices going forward. Moving again, some bots. Palantir, a Palantir fan going back. Not quite the bottom here, but I did get interested because I was Palantir Foundry Certificate Academy passer with Palantir at the enterprise level in my role, and I came away impressed with the product. I knew I wanted to be a shareholder, and I made sure that there were no conflicts of interest there. Also, for anybody watching, so let me pull this over. This was my Palantir slide back in, it looks like October of 2023. I'm bullish. I will not short. I'm flat. By the next one, by the next reports over the coming months. You can see here in the falling wedge that I was back to a buyer again. My initial stop loss was set at 1577 coming out of this wedge. And you can see that 1577 coming out of this wedge was never hit. So we were able to benefit. I do want to talk about this triangle right here because this chart makes it look like it was easy. If you turn on the candlestick chart, you can see it wasn't easy. Anybody trading this pattern with a reasonable stop that wasn't in from an earlier price would have been shaken out if they were protecting their capital well. If this wasn't intended to be a long-term buy and hold. For me, frankly, Palantir is a long-term buy and hold stock. So now, am I my long positions in the current environment? No, I'm not. I'm actually doing the opposite. I'm trailing my stops. I said last time I'm staying in cash longer than usual. But anyways, on to the next one. IoT. It's almost like this trend channel exists after earnings last Friday or Monday, one or the other. Were a significant beat. And I like how you can see on TradingView, that was released, September 5th. So got this gap up. I'm a risk manager, which also means I'm a risk taker. And so I bought some at the money $35 strike call options right before earnings that expire January of 2025. Hopefully this resistance right here ends up being, just a trend channel and doesn't see prices all the way back down here. I will be using, this range up, but I wouldn't be surprised to see something more along the lines of that. We're moving at a good pace. So I did want to talk about one more pattern I mentioned in the last video, one or two, was AAVE. AAVE is one of the first lending protocols on Ethereum, and the Trump family crypto endeavor is, I understand, like a fork of AAVE, or it's being built certainly on top of Ethereum. So this pattern, I mentioned it very clearly last time, formed a 5-point reversal triangle right here whenever it failed to break down from this descending triangle. It then, just like Palantir, just like we just talked about, formed this head and shoulders pattern that failed, and that's why I've listed the $100 price as my level. You can see that it gets a little sloppy when you add the ranges, and of course, what makes it difficult. So AAVE has been, again, my favorite for the last couple of months, and luckily for me, it's also shown some relative strength. Another crypto token that's shows some relative strength again is Soy. I'm not sure how to say it, but it's a layer 1 blockchain, which means it does not exist on Ethereum. It does not exist on Bitcoin. It is like Solana. It is like Ethereum, like Bitcoin in that sense. But I'm not certain that this pattern is ready to break out. It reminds me a lot of this yield curve bottom, the trade that I got faked out on, that head and shoulders bottom that formed, and then prices came back down, formed a double bottom. So my point with that is just that I'm not in a hurry here, but it is on my radar. If you want to see that again, just to see what I'm talking about, it's right here. Head and shoulders bottom that failed, came down, formed a double bottom. Kind of looks like that here, right? So Microsoft, big head and shoulders top forming. I can't wait for this to continue to develop because I can't wait to buy it. Microsoft's one of my favorite companies in the world. They are investing well. They've hired well. They transitioned well out of Steve Ballmer several years ago and into the latest CEO. I do have a friend that works there and she loves it and she's been developing her career, really well company. So congrats to her and congrats to any Microsoft shareholders. Historically, when this market falls, let's see, 18%, it has fallen more in, regular corrections. Here we had a 40% correction. So I don't necessarily expect an entire, another big drop. I would welcome it. And I will be using this pattern to manage my next position. Last but not least, Popcat. Let's talk about the memes because I covered it in the last video. It did not work out how I wanted it to. I was using this head and shoulders shoulder as my risk level as we broke out, and it gave it right back up. So, and of course, we're the same price today because that's how meme coins work. So, meme coins aren't really my focus at all right now. I think there are a lot more markets that have better liquidity, better setups, better patterns, and I find those companies that I want to place my long-term bets. My view on rate cuts coming. If I go to the CME FedWatch tool, I can see that there's roughly a certainty that the Fed will cut rates at meeting this month. All right, let's see. Watch tool. Bada bing, bada boom. Here we go. Probabilities for a cut: 87% chance of a 25 basis point cut, and 13% chance for a 50 basis point cut this month. This is my preferred measure for following what is priced in and what's not priced in the interest rate market. Instead of just saying, do I think something's priced in? I don't really need to do I think about anything. It's right here based on Fed funds futures. So no need to get too cute with that. I believe that we'll not see as much strength in tech as we saw, for example, in the last cycle, because as Tom Lee recently said, when interest rates are going down, growth is less scarce. For there will be a shift into quality, and so I haven't really my next fighters completely for the next cycle, but I'm managing current winning position with trailing stops, attacking a pile of cash because of the yield curve and the unemployment rate rising, and I think that we are walking into a generational buying opportunity in the next 6 to 8 months, if not sooner. So there's the update. Thanks for listening, everybody. Have a good rest of your week, and we'll do it again next week.